The housing market thrives on stability and consumer confidence. And although the economy is uncertain, interest rates are unpredictable, and let's face it, we're in the midst of a political train wreck, the Halifax real estate market remains resilient. A lot of people thought that the market would slow down, but it's just not doing that. Buyers are still active, we're still seeing a lot of homes sell, and in certain price ranges, you have to act fast or you'll miss your opportunity. So what's really happening? Is this sustainable? And should you be buying or selling a home this year in 2025? Those are all things I'm going to unpack in this video as I dive into the stats year to date, January 1st to the end of February. But just before I get into it, if you're new here, my name is Andrew Stevens. I've been a realtor for 10 years. And if you like this content, don't forget to hit that like button and hit that subscribe button. And if you're thinking about making a move in the HRM and you'd like to get in touch with me, you can reach out to me anytime in the Calendly link below. All right, so starting off with the big picture market update, here we go. So far this year, we've had 594 sales in the HRM, and this is up 4.4% from this time last year. So yes, despite all the economic and political uncertainty, homes are still selling. Sales are still on the rise year over year, proving that the buyer demand is still strong in Halifax, especially in the more competitive price ranges, anything under about $700,000 as an average sale price. Now, speaking of average sale price, the average sale price so far this year in 2025 is just over $593,000. And this is up 5.4% from this time last year. And this is what I'm talking about in terms of market resiliency. So a lot of people are talking about the coming crash or the slowdown, but so far that's simply not the case. This 5.4% increase year over year is much more in line with what we're used to seeing in terms of a general year over year appreciation in terms of the stats from 1980 until now in the HRM. However, this is only a small portion of what the overall year will look like. This is only about 10% of what the total sales will likely be at the end of the year. So things could obviously continue to shift in between now and the end of 2025. Now, in terms of the time it takes to sell a home in the HRM, right now we're looking at an average market time of 45 days. So this is up just a couple days from this time last year, and it really depends on what you're selling. So I feel like this number is a little bit skewed because yes, some things are hanging around, but the reality is a lot of homes are selling very quickly for top dollar. But there's a lot of stale inventory at this time of the year, which I'm going to get into shortly in this video, and that's a big reason why that number might be a little bit skewed. Another reason that this could be a higher number this year than it was last year, and it's kind of been trending up over the last couple of years, is that there's a lot more for buyers to choose from. So right now in the HRM, there's about 820 active listings. This is any price point throughout the entire HRM. Now, the breakdown of this by price would be anything under $500,000 is only accounting for about 18% of the homes for sale. Now, anything from $500,000 to $750,000 accounts for about 40% of the homes for sale. Anything from $750,000 to $1 million accounts for about 26% of the homes for sale, and luxury homes over $1 million would account for about 16% of the total homes for sale. So most of the available inventory sits in about the mid-range market, but entry homes remain very limited, keeping competition very high in this price point. The higher end market is flush with listings based on the lower demand in the luxury prices, and all in all, inventory is certainly an issue, but it's much more of an issue within the more affordable price ranges. Now, in terms of this level of inventory and what that means, right now we have about 2 months of listing inventory on the market in HRM. However, this is very price point dependent as well. So in the under $500,000 price range, we only have about a month's worth of inventory. This is very, very low, and it is a hot seller's market. Anything from $500,000 to $750,000, we have about 1.8 months of listing inventory. Again, still a seller's market. Anything in the $750,000 to $1 million range is about 3.8 months of listing inventory, and anything in the over $1 million price range is about 6.7 months of listing inventory, which is a buyer's market. So if you're looking for affordable entry-level type of home, it's going to be a lot more difficult than if you're looking in that luxury market. You're much more likely to compete and see bidding wars, but in the luxury market, you have a lot more to choose from and likely a lot more negotiating power, depending on exactly what you're looking at and what area it's in. This market that I'm describing right now does set up very well for one specific type of buyer, and that is a homeowner who's looking to sell their first home and move into their forever home. A big reason for this is what they bought, let's say 5 years ago as their first home for, let's say, $200,000 to $350,000 is now sitting somewhere around the $500,000 range, and they would be selling in a hot seller's market. If they're looking to upsize to something that's, say, in the $700,000, $800,000, or $900,000 range, that would be considered in a buyer's market. So they're selling high and buying low. So that market does factor in very well for somebody who's looking to upsize right now. In February in the HRM, we saw 425 active listings hit the market. That is compared to about 382 last year in 2024. So more sellers are putting their home on the market, so buyers have more to choose from. Now, because of this, buyers, in my experience so far this year, are being a little bit more picky. The average showings per listing has dropped year over year. In February this year in 2025, we had an average of 3.2 showings per listing. Last year, comparatively speaking, it was 4.8. So we're seeing a pretty big drop off year over year in the month of February, but that doesn't necessarily mean that the demand itself is not there. I think it just comes down to there's about 100 more homes on the market this year compared to last year. Buyers are being a little bit more picky, especially with the level of uncertainty in the market. And because they have a little bit more to choose from, maybe they're not looking at as many homes as they normally would. Maybe they're being a little bit pickier and really picking and choosing which homes they're going to be looking at. Because let's face it, sales are up. So the demand is obviously there overall. So I was a little bit surprised to see that the showings per listing were down, but that's the way that I would look at it, is because there's more to choose from. So people are looking at a little bit less as they're becoming a little bit pickier. And although there's more to choose from, the demand is still high, which means it is still pretty competitive out there. In February, we saw a sale to list price ratio of 99.6%. So that means that homes are still selling very close to the asking price as a general statement in terms of the average, but in many cases, they're still selling over the asking price, and we're still seeing quite a bit of bidding wars out there in the marketplace. And this is not just at the lower price range, but also at some of the higher ones as well. And I'll tell you a couple stories here in a minute of some things I've dealt with so far in 2025. But so far this year, since January, about 27.5% of the homes sold have sold over the asking price. And this is 5.5% higher than the same time frame in 2024. And in terms of the homes that have sold at the asking price or higher, this would be 40% so far this year, which is 11% higher than it was at this point last year in the same time frame. So what does this mean? Well, we're still seeing some bidding wars, and it really depends on what you're looking at. But if you're a seller, it's very crucial that you are pricing your listing accurately, or else it may sit on the market a little bit longer. And as a buyer, well, depending on what you're looking for and what price range it's going to be in, you still have a very good chance at competing a little over a quarter of the time right now in HRM from a stats perspective. And reasonably speaking, you're likely going to be paying close to the asking price. Again, very much dependent on what you're looking to buy. Now, I've said it in other videos before that this is really common in the lower price ranges, but I can tell you that in the last 30 days, I have competed on 3 listings that were all priced at $899.9. Would I say this is normal? Not necessarily, but it is happening. So it really depends on how a seller's pricing their home, what their listing strategy is. Some of them are still pricing a little bit low to try to get this competing offer situation to happen. So it really depends on their needs, their wants, and how they're going about the overall listing strategy. So that's a lot of information in a short period of time, a lot of stats thrown at you. I'm kind of a stats nerd, but let's go back to the 3 questions that I asked in the intro. Number 1, what's really happening? 2, is this sustainable? And 3, should you be buying or selling a home in 2025? So first off, what's really happening? Well, it's really the tale of 2 markets still, right? So everything on the lower price ranges, let's say $700,000 and under, is still a seller's market, especially in that under $500,000 price range, or that kind of entry level price range into the market. Anything in the higher price ranges is considered more of a seller's market, but it's pretty balanced in the $700,000 price range right now. And actually, if I look at the sale to list price ratio across different price points, the $500,000 to $750,000 price range was the most competitive in terms of the highest percentage of the sale to list price ratio. so far this year. So if you're buying a home in the lower price ranges, you're very likely to see bidding wars, competing offers, likely selling over the asking price in a lot of cases, depending on the neighborhood and what the product is. And if you're looking in the higher price ranges, well, it's going to be a little bit slower, a little bit more room to negotiate potentially, and maybe a little bit more chance to kind of get down on the price compared to what the asking price would be. Now, moving on to number two. Is this sustainable? Well, this is a difficult one to answer, and a lot of people are going to jump all over me in the comments about this one. They're going to say the market crash is coming, it's going to tank, it's going to slow down, the world's ending, and all these things. And I get it. There's a lot of uncertainty in the market. There's a lot of questions of where this is going to go economically, politically, and all these things. But I will say that I believe it is sustainable to a certain point. I don't believe we're going to see price points that are going to go up more than about 4 to 6% year over year. Maybe if the Bank of Canada drops the rate another point or so based on everything going on, we could see a little bit of jolt and maybe see 7 or 8% year over year. But at the same time, wages are not going up with that. So it's just cutting that level of affordability. So at a certain point, you got to think that it's going to level out a little bit. At the same time, do I think a crash is coming? No, I really don't. Technically, we would be due for one because the price points have only gone down year over year one time since 1980, and that happened back in 1995. But do I see a crash coming? No, I don't. The supply is so much greater than the demand that we have in our market right now. I don't anticipate that changing significantly anytime in the near future. And I understand the level of affordability is hard to wrap your head around, but at the same time, there's only about 5 or 6,000 sales in HRM every year. So only 5 or 6,000 people have to be able to afford to buy a home. It's not like all 550,000 people in Halifax have to be able to afford it to keep the market ticking along the way that it always does. Now, three, should you be buying or selling a home in 2025? That's really going to come down to your own personal situation. The market is kind of between your ears. It's something somebody told me a long time ago and it really stuck. But regardless of what's happening in the market, people still need to move. So what's your own personal situation, right? Regardless of the market, some people need to relocate for work. Maybe they need more room for their growing family. Maybe they need a different location. Maybe they are, maybe there's a death in the family and a home needs to sell. Maybe somebody needs to downsize. There's all kinds of reasons why people move. Maybe they want to get out of the rental market and start building equity for themselves. So should you move? Should you not? Well, it really depends on your own circumstance, right? If you're looking to upsize, it is a phenomenal time to do it. If you're looking to get into the market in the first place, I would suggest it's still a great time to do it. You're not going to be upset about that. If you're looking to buy, a luxury home and then move again a year later, maybe it's not the right time for you. If you're looking to do a flip or something like that, maybe it's not the right time for you. So it really depends what you're trying to do, what your personal and what your financial situation is. But really, the market shouldn't determine that as much as people say that it should. It should be more of what is in it for you. What is your situation? And if you want to talk about that at any time, you can jump into the calendar link below and book a call or a meeting with me. Now, if you're still here watching, you obviously have some vested interest in this topic. So I'm curious to hear from you in the comments below. What do you think? Do you think that the market crash is inevitable? Or do you think we're just going to keep plugging along? Very resilient market the way it's been basically since 1980. And I'd be curious to hear from you in the comments below. And if you got any value out of this video, all I ask is that you hit that like button and hit that subscribe button so you don't miss any of my future content. And that'll help push this out to more people like you who may be interested in being educated in the Halifax and Nova Scotia real estate markets. And until next time, thank you so much for watching. I really appreciate your support and have a great day.